YouTube. It's your favorite guru from Timu, and today we're going to be just talking about what made me a better trader, what things improved my trading, what helped me with trading. First, we're going to go over the psychological part. I'm going to be playing 2K while we talk about this, and then the second thing we're going to be going over in the charts. You get what I'm saying? So yeah, if y'all boys want to just watch the chart videos, you can skip ahead to like the middle of the vid. I'm not going to keep this part long. If you want to learn everything and go in depth on how to better your mindset and all of that, because you will need it, then keep and continue to watch this video. But with that being said, let's get into it though. First thing we want to talk about is not rushing the process. All right, so I see a lot of people rush the process, and what confuses me about rushing the process, what a lot of people do, because I do it too, still do it, I've done it before when I first started, it's just like you want to get there fast, right? And then what helped me and what made me realize that I don't need to rush it was the fact that if I went this long without it, why do I just need it now all of a sudden? You get what I'm saying? Like, I need it. Just because I can't have it don't mean I need it right now. You know what I'm saying? So take your time with it, of course, and don't rush trades. You feel me? Especially, please don't rush the trades. Like, you can, I don't mind you rushing the process a little bit, but rushing them trades and just hopping in the trade just because you can will overly mess you up. I promise you, it will do more harm than good. So don't rush the trading process. Don't rush none of that different type of stuff. All right, now the second thing is my group I hung around with, right? So the group I would hang around with, I didn't have bad friends. You get what I'm saying? I'm gonna keep the band. I'm not even just a super social person. I like to stay to myself, do what I like to do by myself, to myself. I don't talk to nobody else like that. But the thing is, if you do have a big group of friends and y'all are all doing the same thing every single day, somebody has to break this cycle, and the only way to break this cycle is to break off from the group. Your friends can hold you back tremendously, and you don't even know it, because the fact is, as humans, we like to stick together in a group. So if you're the only one in the group not doing something and not enjoying something with the group, more than likely you're going to try to fit in, right? Because the whole group is doing it. But if you're by yourself with no group and you're a lone wolf, alpha wolf, you will more than likely do everything yourself. You feel me? You're gonna want to get the stuff done. You feel me? Third thing is definitely attention seeking. Don't do things for attention, because it will just, first, you will figure out that even with all of the money in the world, whatever you're doing, trying to do it, you won't impress nobody. Nobody is looking at you trading. It's like, yo, this dude know how to trade, he's so good. Nah, unless you know you got actual diehard fans and stuff like that. But other than that, like your homies, the girl you trying to impress, the man you trying to impress, they all gonna look at him and be like, I want what he got. You know what I'm saying? I want what he got. They ain't gonna be like, yo, he's actually putting in work, and I want to see him succeed in life. Nobody's gonna be like that, I promise you. So don't try to impress nobody. More than likely you're in this zone by yourself, and that's okay. Grind by yourself. The fourth, no, I don't even know which one we on. I'm just gonna keep saying the next thing. The next thing is you actually have to want it though. Like, what changed it was, like, of course I wanted to be rich, and of course I wanted to improve with trading and all of that different type of stuff. But what really made me like go in and go hard was like, yo, I really want that. I got hungry. I put myself down. I made the system. I created the system. That's another thing we're going to talk about. Created the system. Woke up every day, did the same thing over and over and over again. Started seeing results because I was being consistent. And boom, I ain't where I want to be, of course, but of course I believe that it's coming. I know that it's coming. You know what I'm saying? Now I guess we'll talk about the last thing, is creating a system, because that goes with every single thing we tied into. You have to be disciplined and consistent, right? A system isn't something that you can just, I was about to say a system isn't something you can just turn off, but of course that is, you know, it essentially is. You can turn the system on and off, but this system, you want to keep it running 24/7. You need to plug this in into a 24-hour generator, my nigga. You need to be working every single day with this system. Because if you just sit here taking trades just to take a trade, you take a trade whenever you want to, no back test, no journaling, none of that. You just wake up, take a trade, fail, chalk it up. The market doesn't like me. You know what I'm saying? You won't ever be good. I'm gonna just keep it a buck. I'm gonna keep it a buck. You won't ever be good, and it's okay. It's not okay. If you want to improve, you gotta like, you got to put some work in. Got to put some work in. You feel me? So yeah, those are the main things that I will, what's it called, really the main thing is to be disciplined and create you a system. If you don't have you a system in place, I promise you, you're going to have a hard time trying to actually learn how to trade. But let's talk about some of the certain things that I see in the chart that has helped me better with trading. Let's see y'all in like 2 seconds. Okay, so boom, we are on the actual charts now. There are 3 things that I would like to see in order for me to take a trade and help me better actually take. That didn't make sense. Now, there are 3 things that I do in order for me to take a trade, how I find trades and how I, enter inside of a trade. And the first thing is the direction / bias of the day, right? Now, your bias and your direction of the market can be wrong. That's one thing. You can be wrong. A lot of the stuff you point out can be wrong, and that's okay. The best way to learn and how to get better at it is by back testing. I promise you that. It's by back testing. But as we can see for today, we were bullish, right? And how do we know if we're bullish or not? We go to the 4-hour time frame. Now let's not go to the 4. Let's go to the 30-minute. Boom, perfect. We go to the 30-minute time frame. We make this little V shape when we caught this reversal right here, right? Make this little V shape, and now we're holding bullish price action, creating higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Perfect. Okay, so that allows me to see that more than likely we're going to continue up. How far? We're near all-time highs, so we could be having to draw liquidity up there. These is just, I'm not just saying this is not a real thing. I'm just saying we can go. You get what I'm saying? Forget this thing, man. You feel me? But yeah. So, and we can see that we had previous day high over here, which is crazy. We dumped like crazy yesterday that we can be drawn to. Now, let me point out some of the good basis of liquidity and our direction of the market where it could go. As we can see, we just previously took out previous day high. Right, market just opened up 4 minutes ago actually, and it took our previous. No, that's why this is previous day high, because the market just opened. Duh. But yeah, previous day high is essential. Is a direction the market would like to take. Is either going to take its high or going to take its low. Some days we can see that we get stuck in this range. Like 2 days ago, we didn't take neither high or low. But for the majority of the days, you can see we take the low, take the low, take the low, take the high, take the low. We have withdrawal liquidity. We're going to either take a previous day low, previous day high, and that can help you with understanding what trades you should be taking. Now, how can it help you? If we see that we have a strong, today was just a trend day, couldn't really catch any trades, which is cool. But if we see that we have we just have days like this, where we're just trending up, when we do eventually get that pullback, we will have an understanding of where we can enter. Like, because we at the beginning of the day or the beginning of the opening session, we did get this pullback to this fair value gap right here. We end up getting this pullback to this fair value gap, and then we go to the lower time frame. You can see that once we got this pullback, we took out liquidity, manipulated into this 30-minute fair value gap, which is part of my strategy. The Power 3, my bad, I talked about this strategy a lot, so y'all boys can go and watch those videos. But as we can see, we came through, swept liquidity, took out Asia liquidity, which is a draw liquidity as well. I didn't finish going over the draws of liquidity. Time frames or sessions. Which what I mean by that is we can see this is Asia, this is London, and this is New York. We usually take out their highs or those lows. Those are good draws of liquidity. The market tends to take out those highs and no lows, sweep those areas, reverse, whatever it wants to do. So those are good. Previous day highs, the weekly highs, and yeah, those are the main things I look for. We got monthly highs, but it usually takes us a whole month in order for us to get to that high or that low. So yeah, going back over this though. We can see our draw liquidity this morning during London session. Pre-market was to come down and take out this low, Asia low, and reverse. Use this liquidity and use all these built up orders down here, stop losses, all of that, to push up and take us to previous day high. Which previous day high? Let me mark that out for y'all boys real quick. It's just started. Previous day high for today was right here, because this is Wednesday, today is Thursday. Yep, perfect. That was previous day high. We did take out previous day high. We was actually choppy at previous day high. But as we can see, we came through, took out Asia session, then we took out previous day high again, right? And we was retesting this area a bunch of times, and you could also see that we used previous day high as a support area, right? We broke through it, came back, tapped it a little bit, and then pushed up off of it. You know what I'm saying? Next direction we can look for, we had this over here. You know what I'm saying? We got this high up here, and usually I just mark out relevant highs and lows. So this was last Friday's New York session high. You can mark that out, and you can expect us to climb if we're just climbing like this, or you can expect consequent encroachment of this 30-minute fair value gap. So when we get this pullback right here, if you didn't catch this, when we get this pullback right here, you can enter in right here when we get that and aim for consequent encroachment, just like that. Pull that up like that. Nice little 3-to-1 trade, and if you put in one contract, that's $1,500 right there. That simple. You know what I'm saying? If you aim for consequent encroachment, because there's really no way you would know if we will respect this imbalance or if we about run through this imbalance. There is a way, but there is no way. The way we can tell if we will respect this is because we know that what we just did down here, this just isn't how the market moves, right? We came down here, and then now we're pushing up. This down here was our manipulation leg, and this is our distribution, right? We're going to some high, and I believe it's this high up here. I don't think we're going to all-time highs, but we most definitely can. You know what I'm saying? We most definitely can. But I do think we're going to come up here, maybe come to these highs up here. Who knows? Times will tell. But yeah. So we seen that we came through here, and we're also in a bullish trend. You feel me? So definitely have a good sense of direction and bias inside of the market. If you don't understand where the market is going, where the market is headed, right, then you're basically lost. Because why are you taking a trade when you don't know where it could go or what it possibly wants to do? So gather your bias, understand your bias, and take the trade. Now, second thing, how better entries, okay? A lot of y'all be asking me, what are better entries and how do I get better entries, right? There is one simple thing I want to show y'all, and that's confirmation. Okay, what I mean by that, first off, let's delete these drawings and go back to this 30-minute fair value gap, right? So boom, we see that my leg itch. That was, my bad. But we see that we got a draw liquidity right here, which is Asia liquidity, and we have this 30-minute fair value gap, and we know that price is printing bullish price action. So usually when we sweep a liquidity, what do we wait for? That inverse fair value gap. That's a confirmation right there, right? Some people use that as a confirmation. So going back, let's go to the 5-minute because I think it was cleaner on there. I know a lot of people caught that today. Boom. So right here, for example, we see that we have this baby 5-minute fair value gap. After we step and sweep liquidity, we're going to delete that 30-minute fair value gap. We sweep liquidity right here, and we close above it, right? That's a good sign of a sweep. We're just grabbing something. This literally seems like we're just testing the area out. We tested it multiple times. We didn't like it, and we pushed up. Okay, once we tested again for this second time, creating this previous day low, we proceed to push up. And what do? We close above this 5-minute fair value gap. This is an inverse fair value gap. This would be a confirmation, right? Some people like to enter off of this. I usually catch it going up. You know what I'm saying? Like when we going up, if I see we test this level again, I see that sellers get absorbed down here and buyers are stepping in, I maybe would enter right here. But for y'all boys, I will wait till we get this counter closure, or we can get this pullback right here, right? Because we got a 5-minute fair value gap that gets left right here as well. Let's go to the 1-minute. And as we can see on the 1-minute time frame, you can enter off of this breaker structure right here as well, which would be that 5-minute inverse fair value gap. Or we see this this little wick into this 1-minute fair value gap, and you can enter off of it like that. Typically, we don't always go to the 50%, right? This white line is the 50%. That's a good thing about confirmation as well. If you're going to use a fair value gap for your confirmation, for like a pullback or anything, we don't want to close below the 50% mark. And I'm going to show you what I mean by that, right? Right here, this baby 1-minute fair value gap. This fair value gap could have been used as for sales, right? We just took our previous day low. Now we're coming back, and we're going to use this baby fair value gap as a retest to go back down lower. Like we could have had this right here, right? But as we can see, we closed above this fair value gap right here after taking out liquidity right here, giving us a good confirmation that more than likely we're going to continue upwards, right? And so with this, even on this 1 minute, you could have entered off of this fair value gap, getting a way better stop loss and way better risk to reward, aiming for these highs up here, something like that, and boom, this would have been a nice little trade as well. But what I mean by confirmations, right? You want to wait in order for a trade to play out, right? You don't want to just enter and try to bottom tick the market. We don't care about bottom ticks. I don't care if you bottom tick. What you want to see is you actually making money. And the best way for you to make money is for the trade to play out. I need to drink water. I've been talking a lot. Excuse me. But yeah, in order for you to actually start making money, you're not trying to predict the market, because you could have tried to predict the market anywhere. You could have tried to predict it up here for buys, up down here for buys, anywhere for sales, whatever. Stop doing it. Wait for something to happen. Wait for buyers to kick in. Wait for sellers to kick in. You get what I'm saying? Of course, your confirmation could be wrong. That's why I like to wait for a little bit. I trade order flow, so I know if my confirmation is right or not. But y'all don't trade order flow. You know what I'm saying? So you will have to wait for inverse fair value gaps, for levels to get hit, and then to see a rejection off of that level. You have to wait for something. You have to get a confirmation. You can have any different type of confirmation. I'm not really here just to tell you, oh yeah, this is the perfect. I did just give y'all one with the inverse fair value gap, and stuff like that. The breaker structure, we have a breaker structure on the 1 minute. Those are confirmations. The pullback to fair value gaps, those are confirmations. Those are good, right? But mainly what you want to do is wait for something to happen in the market and react. You're not a predictor. You react to things. And what I mean by that is, okay, we swept liquidity down here. Now, do we continue to respect this area for lows and go down? Because we see that we're making lower high, lower low, lower high, lower low. We're going in a downtrend on the 1 minute. But are we disrespecting bearish price action? That's the main thing. Is bearish price action getting disrespected, or is or are buyers coming back in? So is bullish price action disrespecting that bearish price action, or are we respecting bearish price action? You get what I'm saying? If we're respecting bearish price action, we might need to stay for sales. If we're disrespecting bearish price action, we might need to hop in for buys, and vice versa for bearish price action. I mean bullish price action as well. If bullish price action is getting disrespected, sales might look good. If bearish price if it's getting respected, buys might look good as well. So yeah, confirmations, and you know that by looking at the price action. Look at the past PA, which is price action. We're going down. Do we disrespect this and break this level and continue higher? Yes, we do. Okay, y'all maybe want to enter there. You get what I'm saying? When we break this high right here and we retest this high, you could enter off of this high as a little buy, a little, what's the name? A little entry. This could be your entry right here. Stop loss. I'll put my stop loss right. I'll put my stop loss like right here inside of that fair value gap, because we might dip into it a little bit. And you'll be in this trade for probably 15 minutes. No, more like 30 minutes. No, because you enter in right here. You've been in this trade for 30, 45, like an hour. You'll be in that trade for like an hour, and you off for the day, just making like what, 1,500? Probably more than that. Yep, 1,500 on the dot. You know what I'm saying? So yeah, wait for confirmations. Once you get those confirmations, don't be scared to enter. Once you get your confirmation, I don't care, unless the direction of your market has changed or something like news or something kicking, unless something has changed your bias inside of the market and you've seen something change your bias and now you're not going to take the trade, that's cool. But if your bias is the same, do not be scared to take the confirmation trade. Don't be scared to take it. All right. Last thing I want to talk about is my TP and my stop loss. These are probably one of the most important things, because if you have a decent TP, damn, my camera keep getting unfocused. If you have a decent TP, right, or if you're going for like a small amount of points, it really don't even matter where you enter in the market. It do still, don't get me wrong, but you can if you're catching quick trades like this where you're actually holding them, doesn't matter. You know what I'm saying? Because you're not going to be in this trade for that long. Because this is like what, 75 points right here. Let me see. Yeah, 75 points. This is 75 points, right? If you were just going for 10 points, right? You entered in right here. 10 points would be right somewhere like right here. You would have literally got in this trade and got out. You know what I'm saying? And you still would have made, if you put in like 2 contracts, you still would have made $500 that quick, in and out. You feel me? And if you would have put in 1 contract, you would have made $250. Then you do it again, another 10 points, another $250. So you can have, the reason I said that is because I decided to go for lower point sizes. Not lower like 10 points. Don't get me wrong. I'm going for more than 10, but I'm going to I'm taking like 60. The most on a good day, if we like on a trend day today and I'm trailing my stop, we'll have 100-point stop loss and stuff like that, or 100-point take profit. My bad, not stop loss. But if the market isn't just presented, I'm going for 50 to 60 points, and I can put on 2 contracts, and that'll be a cool little $2,000 just in one trade, and I'll be in and out that trade in a matter of minutes, because more than likely we're going to retrace 50 to 60 points. We're probably not going to get that whole 80 to 100 points. You feel me? And that's what really changed my trading for like forever. Like when I started lowering, because when I first started and I was seeing niggas bottom tick the market like Powell and stuff like that. They were bottom ticking the market and going for crazy RR, like getting 300-point trades and stuff like that. Of course, I wanted to copy that. You feel me? So I would get in the trade, get in, my direction of the market to be good for like 50 to 60 points. And then when we get to those 50 or 60, it reversed and stopped me out. And now I lost because my take profit was way too high. So lower your take profit a little bit. Go for 50 points. If 30 points work for you, go for 30. Do what makes you money. You don't have to look like nobody else. Don't try to look like nobody else. Do what makes you money. These things, all of these things will help you. But the way it helps you the most, if it applies to your trading. Fix this whole thing, the direction of the market. You have a different way of finding the direction as me. Confirmation, you have a different confirmation than I do. You have different entry triggers as I do. And your TP can be 10 points. Your TP can be 40. But I say keep it around 50. You feel me? Let's keep that the same at least. You feel me? I promise you, change your TP to 50 to 60 points, and watch how you're trading. Your win percentage goes skyrocketing through the roof. Stop going for those 80 to 130 point trades and stuff like that, because more than likely you're not going to get them every single day. You feel me? Unless like you just catching a full on reversal, more than likely you're going to get in late in the trade. So don't try to hold the trade forever. Get your 50 to 60 points. If another opportunity in the market presents itself, then enter again. Get another 50 to 60 points. There go your 100 to 120 points right there. You feel me? So, yeah, man. That's all I got for today. Direction / bias, confirmation, and your TP. Oh, my stop loss. I usually keep like a 15 to 20 point stop loss. You feel me? And that way, if it do come down and draw down, I won't get stopped out, especially if I'm using a lot of, if I'm using more contracts. Yes, if I do get stopped out, I do lose a big chunk. But most of the time my direction be right. And sometimes the market will come down. Even if you have a really good entry, it will come down to draw down. This inevitable. So don't worry about that. That's why I have a wider stop loss than you see most of these other traders that trade how I trade. Because it gives me more wiggle room. So yeah, that's it for this video, y'all boys. I hope this helped. This video is getting posted the day of recording. Y'all can't see the day, but yeah, I appreciate y'all for the love on the last video. I see that y'all messing with it, so that's why I'm trying these type styles of vids. But yeah, man, God loves y'all boys. Catch y'all in the video. Peace out.